Hi everyone, welcome to Spark Spread. Today we're going to be doing a quick update on my Q4 EPS estimates for Tesla. Let's dive into it. All right, so now we are back in my EPS estimation model. The main change we have here is updating the Q4 actual number. We had Tesla report deliveries of 180,570 vehicles, and so that number has been updated here, mostly by adjusting the Giga Shanghai delivery estimate. The other big change I made here is the upgrades to FSD from the existing candidate pool. I had estimated that at 3% based on some of the progress I was seeing on the FSD beta program at the time. I think that rollout has been a little bit slower than I was originally estimating, so I'm thinking there may be a little bit less enthusiasm than I was originally thinking. So I dropped that from 3% to 2%, and so we have fewer upgrade conversions from that as well. Those changes, both the lower deliveries and the lower upgrade conversions, results in a lower FSD cash intake in Q4. I had it at 685 million in the previous video. I'm dropping that to 595 million based on those changes outlined here. On top of that, the thing I was expecting Tesla to launch in Q4 was a US-wide release of the FSD beta program. I was thinking that would progress beyond a beta and go into a wide release, which would result in automatic driving on city streets for all US owners. I was thinking that would trigger a large amount of deferred revenue recognition as well as higher recognition on new sales. That clearly didn't happen, so the percent recognizable, or as I'm showing it here, the percent of FSD cash intake, which is classified as deferred, is actually dropping. I had that falling to 35% in the previous video, which was a significant drop from the 45% estimate in Q3. Now, based on the fact that the beta program is not in wide release, I'm really expecting very minimal recognition, so I'm dropping that only to 42% instead. What that does is it changes the deferred revenue recognition. I was projecting 200 million in the previous video. Now I'm projecting only 64 million in Q4. On top of that, the FSD revenue, GAAP revenue on new sales, I was estimating that would be 445 million in the previous video. Now I'm expecting only $345 million. So that is certainly a sizable decrease, but I do want to point out that that is only related to timing. This is only on the GAAP timing of the deferred revenue. So the increase that we have here is actually on the end of period deferred revenue balance. So in the previous video, I was expecting that the deferred revenue balance for FSD would be 918 million at the end of Q4, but by increasing the amount of the FSD revenue which is deferred, that balance is actually increasing to $1,064 million. That is a large chunk of revenue which I expect Tesla will increase over the next 4 quarters, as long as the FSD program does go into wide international release. That is a major catalyst for 2021 earnings, which will certainly carry forward. I do want to highlight that while the earnings numbers I'm going to show here are certainly coming down, a good chunk of this is just related to timing of FSD revenue recognition. That is the last major change from the previous model that I presented in the earlier video. I do recommend, if you have not seen that yet, please do check it out because we go into some of the more details, especially around core manufacturing margin, which I think could be conservative the way that I've modeled it here so far. So that may be one area of potential upside, but I'm not going to go back through and rehash all of those details in this video. If you do want to go back over those details, I'd highly recommend it. So getting down to the bottom line here, after these changes have been made, that gets us to GAAP earnings of $848 million, which is a decrease from the $1.1 billion I was previously projecting. Although, again, just to highlight, this change is primarily due to lower FSD recognition. So this is mostly a timing issue and not necessarily what I would say is a structural profitability issue for Tesla. So this does create more upside in future quarters versus my previous expectations. As a reminder, my earnings per share numbers in the previous video were $1.27 on an adjusted basis and 98 cents on a GAAP basis. These numbers are changing to $1.05 adjusted or 75 cents GAAP. This is the largest decrease I've ever had between my pre-production and post-production numbers. Although I do want to point out again that this is really just due to how difficult it is to predict that FSD revenue and how much will be deferred. I expect that Q1 will have a good chunk of recognition, but that really is just something that we need to monitor, see how wide that FSD rollout goes, and if it doesn't happen in Q1, then most likely will happen in Q2. But it just is hard to project exactly when the timing of these software updates will go out, and they do have a very large impact on profitability, given the fact that Tesla has a deferred FSD revenue balance of around $1 billion at this point. That will be a huge driver of future profitability, something that I think is worth taking a very detailed look at, and something, frankly, I have not seen a lot of other analysts modeling out in this level of detail. I hope this was helpful for all of you. We'll see what Tesla reports when they release earnings. I'm expecting later this month. If you would like early access to these EPS numbers in the future, please check us out on Patreon. Thank you so much for watching. I'm Matt Smith, and this is Spark Spread.